some of the greatest volatility in the stock market occurs during earnings season. This is a time where corporate reporting is informing you of whether a company's profitability is there and whether they're continuing to generate more revenue to increase their bottom line. Just like fundamental news moves the Forex market's a great deal, knowing when and where these events are going to occur can help you learn to capitalize on it. Welcome to What's the Focus? This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. First of all, happy Good Friday and happy Easter to you and your family. What we're going to talk about today are some strategies that you can take advantage of during earnings season and how to identify basket strength in currencies. Because this is one of the most important things to be a successful basket trader in Forex. And it's also a very important thing to understand when earnings reports are going to hit the market so that you don't get caught looking all of a sudden on the wrong side of a trade with a very dramatic price move. As always, I say let the charts do the talking. I'm going to take you into the charts right about now as we're viewing the basket of exchange-traded funds, spiders, diamonds, Qs. I'm going to take you to the Qs first of all. This is the NASDAQ 100. NASDAQ 100 was fueled to new highs during our earnings season. Now into our next week, the week after Easter here, there's going to be several hundred companies reporting. And when companies report, there's a big price move because the stock market is only open 6.5 hours a day. This creates things that are called gaps. Now, on opening bell, what I do every morning is I scan the markets and I'm looking for ideas to be a contrarian, some ideas to take what's good and make some money off of it. Here's a little company that's called Skechers. You might know them. They make shoes. Well, Skechers was down 15% this morning on earnings. So what do you do there? Well, if you're short a trade, how do you get out of your short sell? That's right, you buy to close the trade. So when you buy to close the trade, you create this buying pressure. And for me as an active trader, I'm going to go take advantage of that. I'm going to get long the stock off the bottom. Sounds preposterous, right? But this is a contrarian strategy that I've been using for almost 2 decades, and it works because the market gives you this trade. We're going back into the charts on Skechers. I'll describe fill the gap. Now, when you have a gap down, which is the change from the previous close to the day open, what we're looking to do is allow the market to finish selling. So take the high in the first 3 to 5 minutes, draw a trend line. This trend line shows you that in fact, now that area has become resistance on the day. When the price breaks, get long at market using a 1-to-1 risk to reward ratio, initially the price of the stock. So what this means, $30.42, get long at market, going for $35.40. One of my traders this morning, Ben, in the Carolinas. Ben got in, put in a 1% trailing stop here, and knocked out over 3.5% within less than 15 minutes. This is a fast strategy. Sometimes it wins within just a few minutes. Sometimes it takes a little while. But even then, we're not trying to pick a bottom here. We're trying to establish a trade. So from $30.42 to $32.42, that's how you make $2 day trading easy of opportunity. Now on the other side, a stock that gaps up under good news. This is a company called Lumber Liquidators. Now Lumber Liquidators gapped up really strong, and the first thing I was thinking was those famous 2 words I like to repeat over and over: short it, short it, short it. So how do you take profits in a long trade? You sell to close a long trade. That's how you make money. So when other sellers are coming in there, they're taking profits, they're selling. This is putting selling pressure into the charts. And as a day trader, I can short sell into that strength and capitalize on it. Let's go back into the charts and I'll describe fade the gap, because that's what this strategy is. You're fading the gap. Just like a jump shot where you're pulling back, you're fading the shot. So get short at market after the low in the first 3 to 5 minutes. Draw a trend line and then set your order around entering on that trend line. You're going for 15 cents. Make sure we cover the spread. I will only do this on liquid stocks. The first move down was 20 cents. The second move down was 35 cents. So you're talking about a $12 stock. 2% the first move, 3% the second move. Your targets are only 1%. Traders I've taught this strategy to are done trading within the first hour, because that's all that they need to do to make their money to leave the market. Now the Forex market doesn't gap quite like that, because the Forex market only closes on Friday and then opens again on Sunday and is open 24 hours. So gaps happen in the Forex market because of strange price action. Let's go back into the charts and I'll show you what I'm talking about with a gap on the New Zealand dollars. Now, if you'll recall, we've had a lot of noise out of the New Zealand markets this week, and it's driven some pretty zany price action. Gaps are created in an intraday market when the price moves, establishing a wide range. Now, you either trade into this gap or you trade around this gap, but eventually the gap is going to change. This is New Zealand dollar. Now, of course, you don't see the gap right now, so you got to go to a smaller time frame. Gap plays are day trading strategies. When you have a big, stupid gap like this, which is what it is, that big price range that occurred here on the New Zealand dollar with 107 pip range, it's created a lot of noise. Now, you can trade within the gap, or you can trade outside the gap. I like to trade outside the gap. I like to trade the breakdown. But the truth of the matter is, in between this 100 pips of volatility, there is opportunity to continue to play within the gap, up or down. Now, when this was retracing to the long side, I really wouldn't want to fool with that. But look how 67.25, 67.22 became resistance. And even on the morning, this lent a nice opportunity to go out there and snake yourself 40, 50 pips off the New Zealand dollar, continued weakness. Now, gap plays, again, not really that big on Sundays unless something really silly occurs over the weekend. But when you see a gap like this, eventually the price is going to break above or below. A break below gives more invigoration to being a short seller. And look at this. No doubt that we're holding some support here, 74.65 level. And there is even around the 75-cent mark there. So this is showing a really big display of the way that the markets can move within those large moves. Now, I mentioned a moment ago, my primary purpose here on What's the Focus today is to speak to you about basket strength. I'm going to do this in the yen because the yen is on the cross of everything. So basket strength, you're looking for the greatest movement against each other because you're taking a single lot futures contract and another single lot futures contract and pairing them together when you're currency trading. And one of the things I wish I would have known when I began trading was how to identify basket strength, because you've got, a couple dozen currencies that you're following, you're tracking. Why is this one going up? Why is this one going down? Now, here's a note about basket strength. If you have two instruments that are trading weak together, they're not going to move very much. If you have two instruments that are trading strong together, well, they're not going to move very much. For example, if you have the pound rallying and the Canadian dollar rallying, and then you pair the pound CAD, you're actually not going to see a lot of price moves. As a matter of fact, you'll see those neutral doji candlesticks, which are very indecisive. Let's head back into the charts and I'll explain. So check this out. This is the franc yen. Why is it going down? Well, it's going down because it's doing this or it's doing that. No, it's going down because you have a weak Swiss franc paired to a strong US dollar. So you can see that because the last 2 days, red candlestick, good bodies, 47 pips down the day. This is basket strength. Now, this is the New Zealand dollar, Japanese yen. Remember, I was mentioning a moment ago, New Zealand dollar has been pretty swell on the sell against a strong Japanese yen. This produces a price movement south. But if you take it and you pair it with something that's moving somewhat strong, like, for example, the dollar yen, now what you're going to witness is limited price range. This is only down 12 pips. It's moved 30 pips today. Why? Because you're trading a strong US dollar to a strong Japanese yen. It's better to trade opposing forces than to trade forces with the same opinion. Here is euro yen. Euro yen will move to a daily chart here as well. But look at this from two sides of the argument, because that's really what you're working with. You're working with a weak euro paired to a Japanese yen that is strong. That produces price movement. 91 pips of range, down 76 pips on the day. So if you've ever wondered what you need to do to start getting into those currencies that are moving, I stay away from the ones that are not moving because they're not going to get anywhere. And so it's just going to waste time. But if you can identify where the setups are, even when they're not moving, this is the guppy. It's only moving 50 pips today, which is not, CAD yen. And the weak Canadian dollar is down about 30 pips against a strong yen. But when you're pairing things that are not moving together, your production is not going to be very strong in the trade. This is the pound yen on a 4-hour chart, switching to a day. And there's 52 pips down the day. And it's not because the pound is really trading that weak, it's because it's paired up against a strong yen. So remember, when you're trading currencies, when you're pair trading, if you can take the time to really realize what is driving the direction up or down, that helps you not only say, let's say that you were looking to short some euros and the euro yen was dropping, and then you see the euro dollar, and you're thinking, well, euro dollar is going to drop. Look at the US dollar and decide whether dollar is strong or weak, because if the US dollar is trading weak against the euro, then the euro dollar is prone to rally. Basket strength is one of the best ways for you as an intraday trader to get the pulse and tone of what the market is doing, and therefore trade with more confidence and move directly into more profits, because it'll make a higher winning percentage happen. So those are just a couple of tips that I've got out for you. We talked about fade the gap, fill the gap in the equities markets. We've talked about basket strength and how to identify that in currencies. And if you have any questions about that, just go ahead and type them up in the chat box. If you like what you hear, give us a couple of likes or click on the link below to join me in my class, and I'll show you how to make this a habit. With Market Traders Institute, this is Kevin Dixon. Thank you again. Happy Easter. Thanks for tuning in to What's the Focus, and we will see you next time.